All right, I think we'll get going here. So again, welcome to today's webinar titled Manual Mess to Data Success, Driving Profitability with Your Data. Data is one of the most underutilized assets in construction, and when you have the right systems and workflows in place to deliver accurate and accessible insights, you can streamline cross-department collaboration, monitor what's important to you in your role, whether you're a CFO, project manager, superintendent, controller, executive, and then also monitor the business. And this all rolls up into running a financially healthy construction business. So for those that are getting exposed to ProNovos for the first time, just as a quick overview, we are a cloud-based construction software provider that we offer analytics, financial workflows, which we'll share some of that with you today, and then also offer a mobile-friendly project management solution. So getting off starting on the left-hand side on what we'll cover today, and then we'll get into intros. We're going to cover reports, KPIs, and insights that your organization needs to run a financially healthy construction business. Paul is going to go through profit reporting methods for contractors and standard financial reports. We'll cover key financial metrics that contractors should be monitoring, which includes financial ratios, their calculations, what they mean for your business, and how you can use them. By the time we get to the third point, which is benefits of automated data workflows, you guys should have already seen a delivered output of it, but we'll highlight some common pain points that you can automate away with data workflows, reducing and eliminating it. So my name is John O'Brien. I'm the growth manager with ProNovos. I've been here for nearly 4 years now. I first cut my teeth in construction as an undergrad, working for a collegiate housing general contractor, EDR, on the project team as a project intern. And I've also notably worked on the buy side in private equity for about 2 years, doing due diligence on the financial performance, economic outlook, market size, and operational efficiency of small to medium sized contractors. Just as a quick housekeeping, if anyone has any questions, you can drop it in the Q&A on the navigation bar, and we'll circle around to them at the very end. So if you do drop a question in, don't feel like we're ignoring you. We'll just answer it at the end. And then also, like you've already seen, some poll questions will pop up. So if you guys could answer them to the best of your abilities. So with that, I'll pass it off to a familiar name if you've attended a webinar in the past, and that's Kevin Bright.
Thanks, John. Yes, I'm the product manager with ProNovos. Been with ProNovos for about 2 years now. But prior to joining ProNovos, I was actually in the construction industry doing project management for about 7 years for a commercial contractor out in California. So very familiar with the construction industry and how it should be utilizing data and some of those challenges in terms of how to get the most out of your data. So looking forward to discussing that here today. And then also joining us is Paul Atkinson. So Paul, let you give a quick introduction.
Thanks, Kevin. Yeah, Paul Atkinson, Smith & Howard. I'm one of the construction group leaders here at the firm. Been with the firm over 25 years, and all the time that the firm has been in existence, or 50 years plus, we've been very involved in the construction space and been active members within the AGC, the ABC, and CFMA chapters here in the Metro Atlanta area. So with that, just want to get on with the slideshow. Before we do that, I want to talk a little bit about Smith & Howard. We're a family of companies that are just here to build our clients grow. We have about over 160 folks here, that mostly in the Metro Atlanta area, but we're spread out across the whole nation. We have clients both here at a local level in the Southeast as well as a national level. And one of the most exciting things about this slide is I like to show folks is that we're truly driven by our clients, our people. Driven by our values, which are our clients, our people, excellence, and our integrity to our clients and to the community. And then just overall, we're committed to proactive clients to communication. So the main thing we want to talk about first is just the different methods of profit reporting for contractors. There's two main methods there, which is your completed contract and then your percentage of completion. With most clients and the general contractors and subcontractors reporting on a percentage of completion basis. So wanted to get a little bit into the details of that. So next slide, Kevin or John. So with percentage of completion method of accounting, how do we calculate our percentage of completion? So we look at that on a cost to cost basis generally, And what that does is allows us to calculate a percentage of completion to have profit that is recognized as the job progresses on that percentage of completion. What we then have is that we have sometimes billings that don't always equal revenues, and then ultimately revenues don't equal what our cash is collected. And we'll see that in a little bit when we kind of look into the ProNovos details as far as kind of analyzing that data to make sure we're kind of projecting that on a correct framework. So with the percentage of completion method, what you have is when you don't have always the revenues and the billings equal, you have sometimes where your costs and your estimated earnings will be in excess of what you've billed. So that sometimes is referred to as under billings. And so like it says there is your revenue will be in excess of what's billed to date. And you'll have that as an asset on your balance sheet. So it's an unbilled receivable. And now you kind of see that within your financial statements as a contract asset on like I said, on your balance sheet. So the opposite of that is where your billings are in excess of what you've earned to date. And so you'll have an overbilling situation. And so you'll see that as a liability on your balance sheet, typically within your contract liabilities on your financial statements. So where is all this information calculated and computed? It's in the contract status report, the job cost report, your WIP report. There's kind of different names that people associate with that, but it all generally shows the same information, which starts off with your contract price, your estimated costs, and then your cost to date, and then your calculated percentage of completion, the billings to date, and then the associated profit of that, and then as well as the calculated your over and under billings associated with that line items. So I've provided an example here of what a typical kind of job cost report looks like. You know, as you can see, a lot of information on this. Some of this is, you know, calculated by the inputs that are on there, and some of the information is done manually then is updated usually, hopefully on a frequent basis. But again, these are inputs that are then calculating then the outputs, and that we can see on the next slide that shows you how these amounts are actually calculated. Again, a lot of columns here and a lot of numbers here and a little bit of confusion as far as how sometimes these are calculated, but you can see the math behind some of these calculations and how these are derived. And this is done on a job by job basis. And as you can see, the quick math on here is, you know, if we start from the left, we could see our contract amount and then our total estimated cost. So those are inputs for, you know, again, what does that contract amount look like? What is our estimated cost at any point in time? And then that gives you what your overall profit is expected to be. And then that fourth column there is in a computed column where we look at your cost of revenues earned to date, which is the column 6, divided by your total estimated cost. It gives you that percentage. We take that percentage, multiply that times our contract amount, and that gives you your cumulative contract revenues earned to date. So 5 minus 6 then gives you your profit to date. And then you take your billed amount, and then you can then calculate your billed amount to get to your far right columns, which is your over and under billings that we talked about earlier. You look at that in that middle column where it says year ended December 31st, 2021. That amount is then what is earned during that period, which this spreadsheet or this calculation doesn't show you is if there was monies earned in previous period or billings or revenues done in previous period, you back the previous amounts out from your inception amount to get you your information to be able to reflect on your income statement. So that's a lot of talking, a lot of words, a lot of numbers. I think I want to hand it over to Kevin real quick so he can kind of show you how the ProNovos uses all that information and kind of presents that.
Yeah, thanks, Paul. So what we're going to show is we're going to show what that WIP solution can look like in a more modern version. I think we see a lot of contractors doing their job schedule, their contracts in progress, the WIP, whatever they may call it, in Excel. And Excel is really good because it's flexible, but it's kind of a very manual process. And what we see is contractors spend more time kind of preparing that file than they do actually analyzing the data. So what we really strive to do in ProNovos is increase your access and availability to that data. So what you can see in our work progress solution is we're going to pull that data automatically from the ERP system nightly. So you're not having to manually update any of the columns. You're not having to input any of the calculations. All of that is already done for you. And then you can kind of see that data populated right here for you. And what that allows you to do is spend more time analyzing the data. So if I want to provide different filters to look at, hey, how is the certain project manager performing? how am I performing in a certain industry, I can look into that detail. And it gives me a lot of flexibility too, where I can kind of modify what those exact metrics I'm looking at within my WIP. So it can have all the standard columns that Paul was showing on the Excel file, but we can also kind of add additional columns if we want to provide more context to our WIP as well. And then it also allows you to drill into greater level of detail within the project. So I can see here kind of how my profit margin changes on the job over time. What are some of the adjustments that are leading to those changes? And then how my job costs kind of change throughout the duration of the project. So now I'm able to kind of take it from a row of data and get more detail around my project. So I can really understand at a full picture really what's driving, the profit on the job, what's driving the over under billings on the project. I can get that greater level of detail and that greater understanding of what's making a project successful or not. And then the next part of this is if I go and I'm tracking my profit across all my projects, I can then look at this project profit analysis dashboard, which allows me to slice the data in different ways where I can see, okay, where am I experiencing the most profit across my projects? What type of projects am I most successful at? Are certain project managers more successful? Am I more successful in certain industries or different project sizes? And this gives you a greater level of insight into really where you should be focusing your efforts as an organization, where are places that you need to improve on. If you're chasing additional work, where do you really want to put your more of your resources to make sure you're maximizing your efforts. So you as a company are making sure you're growing in a responsible way and in a way that's most efficient. So for example, if I wanted to look at Jack Jones's projects, I could click on him here and all the data is going to filter. I can see how he's performing at each different project type, the geographic area, the project size. So having additional analytics like this is really a good way to kind of take your WIP reporting process to the next level, where it's no longer just a static report that you're looking at on a monthly basis, but it's really a day-to-day tool that you can kind of analyze your operations and get a greater level of detail. So that's kind of how you can kind of take what Paul went over in terms of, hey, that percentage completion accounting to getting that greater level of detail and analytics about your company. And with that, I'll hand it back over to you, Paul.
Yeah, thanks, Kevin. So real quickly, I wanted to kind of just generally go over the financial statements real quick, the kind of the three main financial statements in addition to the job cost report that we already kind of talked about, were the balance sheet, your income statement, and then your cash flow statement. So a balance sheet is really just reflecting the point in time of where we are at that point in time. It's very static information. So those made up of your assets, your liabilities, and then your owner's equity. You can see the different definitions of what is usually included in that. So if we move to the next page, we can see an example of what a financial statement might look at. Again, you start with your cash, your most liquid assets, and then your contract receivables, and then your other type of receivables and your other assets. And then we can see those costs and estimated earnings in excess of billings that we talked about previously, presented as a current asset on your financial statements. This example doesn't have it here, but sometimes you might see where you have retainage that's included within our contract receivable here as a current assets. If you have some significantly longer term contracts, you might have long-term retainage, but generally most of our clients have contracts that are a year or less, and so most of that is generally always current. Then we move to the next page. It's within your liabilities. You can see your accounts payable, which includes your retainage, various other payables, and then your billings in excess and your estimated earnings, as we talked about previously, is your liability. And then the difference there between your assets and your liabilities is your members' capital at any point in time. Then when we look at the income statement, this is a period of time, and you can look at this on a monthly, a quarterly, or annual basis. And most financial statements start off with your revenue and then your cost of revenues, and that results in your ultimate profit. And then what do we do with our profit then to pay our general or administrative or our overhead expenses, can then use to fund those expenses, like I said. The next page, we can see here a typical financial statement where we see our revenues and then our cost of revenues equal our profit. And example here, if you were to do the math, we're going to get into KPIs here in a minute, but if we were to do the math on our gross profit, a nice little uptick in our profit percentage in 2022 And to Kevin's point, maybe we had more profitable jobs during 2022 that resulted in that additional profit. And then we had additional G&A expenses, which part of that could have been, we could have paid more bonuses or something of that nature was contributing to our additional G&A expenses in 2022. And then the last statement I mentioned earlier was our cash flow statement. Usually that's presented with 3 different categories, with your operating activities, your investing activities, and your financing activities. This presentation is our direct method, where you're starting off with cash received from customers, then the monies that are going out to your suppliers and employees, resulting in the net operating activity cash flow. And then what do we do with that cash from operations? We can use that to invest it, and then to finance, various equity type transactions with contributions or distributions, or then monies that are used to then pay back notes receivables or anything of that nature. That's more of a financing activity like debt and things of that nature. So you'll have here then sometimes the indirect method that you're seeing here will then replace the direct cash flows from operations, and the statement of cash flow. This starts off with our net income, adds back or deducts any non-cash operating activities, and then the changes in our assets and our liabilities that result in our net overall cash flow from operations. Then we kind of already briefly talked about the job cost report already. Again, this shows a summary of information that's using to see where our jobs are at any point in time, hopefully easily as Kevin presented it, or if it's a manual method from our Excel spreadsheets, that's again where information is used to summarize all the activity from our jobs. And this is kind of the main page. A lot of times when users of a financial statement for contractors kind of flip into the back, if it's in supplementary information, they look at that, see how the jobs are doing, what is going on with those particular jobs. Is there job fade? Is there, job gains on the back end? How was the company effectively managing their jobs? Is kind of the key to what they look at. It has also the contracts in progress, and generally also your completed contracts at any point in time. Then one last thing I wanted to just point out, which is generally just kind of in your footnote information, typically is backlog is a good indicator of where things are at any point in time. So backlog is just the cumulative contracts that you have in progress minus the revenues that you've earned from those contracts. That's the revenue backlog. And then you can also have profit backlog, which is basically calculated the same way as what you've recognized to date minus what you expect to earn from that overall. And so that gives you your expected backlog information. And what this doesn't show in this example here, but what we typically add within our financial statements is future backlog after any point in time. So this is as of December 31st, 2022. So if we were issuing this audit report, let's say in April of 23, we would want to disclose to the users of the financial statements what additional new contracts or new change orders that weren't reflected in the previous job schedule have been entered into subsequent to year end. Because this says $11.9 million of backlog presented, but if there was some significant contracts entered into after year end, let's say 25 million entered into, we want to disclose that to the reader of the financial statements. That's basically additional backlog that the company has, and so we would want to show that as a parenthetical information below what we're showing there is the actual backlog at the end of the year. So then, what do we do with this information? How do we use the information that's in our financial statements to then kind of just manage the business? And then so we use KPIs, key performance indicators, to be able to do that. Again, what do they help us with? They help us take on new growth, new markets, hire and maintain our skilled workers, and then just use that information to just manage the business overall. There's kind of 4 main categories. There's profitability, leverage, efficiency, and liquidity. And so I think we have a poll question popping up here. If we could take a quick look at that one. So we'll give you a second to answer that. So I think as we move forward and look at the different ratios that are available to folks, if we look at kind of the key profitability ratios in our system, or I think ProNovos gives you definitions of this, of these different type of ratios, but we have some of these presented here just for your own use within the slide deck. You can kind of see the profitability, return on assets, return on equity, times interest earned. And then as we move into some of the other ratios, we can kind of see, well, this is interesting results there. And then I think the next one is just the various different leverage ratios that we have. And then there's some more leverage ratios. I believe, again, these are just the general definitions of those. And then your efficiency ratios, how well do we kind of utilize those information? And then the last categories is then our liquidity ratios. This kind of, again, this kind of shows you how we manage the business. So quickly, we kind of, again, these are the same financial statements that we were looking at before. If we use this information to kind of calculate some of the following ratios, on the next slide here is kind of a couple examples. I kind of alluded to this a couple seconds ago when we just take your overall profit divided by your revenue. And that gives you your gross profit percentage, and this shows you, again, we had a nice uptick of our gross profit there. And people always ask me, can you give me some benchmark information? Like, yeah, we can give you some industry benchmarking information. But I think Kevin alluded to this too earlier when he was briefly going through the job cost schedule, is that, your best benchmarking is almost internally, your own benchmarking information for your types of contracts, the various types of, project managers. Maybe you have all project managers working on the same type of the jobs. Who is working on those most efficiently and effectively, and then you can benchmark that internally and use ProNovos to kind of help you with that. I think the next calculation here is just your current ratio. Looking at your current assets over your current liabilities shows you, again, where you're at any point in time. Generally, you want that always greater than 1, but usually around 1.3 or higher is kind of somewhat of a benchmark, just to kind of make sure you're having good operating working capital to be able to function and operate the business. And then your asset ratio, this kind of your quick ratio, takes out from those current assets some of the less liquid assets that you have. Then it shows you again here, this number generally is okay to be a little bit lower than your current ratio because you're backing out some of those assets. But again, you kind of still want that to be at a 1.1 or higher, just to make sure you have that operating liquid, working capital to operate the business. And then this is just, showing how effectively we're running the business, how much revenue can we generate based on our working capital. Sometimes, if this number is a little bit too high, it might show the need that we actually need more capital, because it's great to have excess revenue or high revenue, but at the same time, do we have enough working capital to kind of sustain that? And I think the last ratio we have presented here is just your liabilities to equity or your debt to equity ratio. Again, you don't want to see where we have too much liabilities in comparison to our equity, because showing a number that's a little bit too high there, that's just generate the fact that we're just a little bit over leveraged to be able to operate. So those are some definitions and some quick examples, I think, here that we've shown. And so I want to head back to Kevin to kind of show how ProNovos can actually summarize that in a nice, clean fashion and at your fingertips.
Yeah. So what we're going to look at here is what we call a kind of financial ratio dashboard. So there's two main components to it. There's your financial statements on the left, so you can look at your income statement, your balance sheet. You can select the years that you want to show. So let's say I only want to look at 2022. You can update it, and then you can also kind of adjust the slider here. So if you want to say, hey, I want to go back and see what was my financial statements as of June 2022, it's going to update that data in real time. So again, this is giving you a lot of flexibility to dig into the data in different ways. We want to take it from that financial statements. It's that static report where you're just looking at numbers in the page, where it's really something that you're analyzing more actively, kind of saying, okay, how does this compare to the previous year? What if I look at, this quarter end compared to this quarter end? But then what that allows us to do, and this is really kind of where a lot of the insights from this dashboard comes from, are the financial ratios. So we have those same 4 categories that Paul touched on: liquidity, profitability, leverage, efficiency. And what you can do is you can select the different ratios here. So if I wanted to look at my working capital turnover, I could select it, and I'm going to get that quick definition, how it's calculating within the system. And it's going to tell me what my current value is. So I can see that 2.15 is what my current working capital turnover is. And then this gets back into what Paul was talking about, where your best benchmark is, how does that compare historically, how you performed in the past? So I can go down here and look at, okay, over time, how did this change from year over year? So I can start kind of benchmarking internally to say, okay, at the end of 2023, we know it's important to get our working capital to X level. or maybe it's looking at your profitability and saying, hey, we want our gross margins to be above 20% at the end of 2023. And you can use this to kind of make sure, okay, are you staying in line with what your own internal benchmarks and goals are to help make sure you're meeting the strategic objectives of your company? And then you can also kind of see, okay, are there any kind of crazy oscillations in our historical data? Maybe your profit margin really took a tank in 2020. Okay, was that related to COVID? Was it related to something else? It's a really good way to start kind of asking yourself more of those why questions around your data, because it's always good to know what those top level metrics are, but really understanding the why and the context around it is really where you want to get to. And then that's where a tool like ProNovos that allows you to analyze the data, get to a greater level of detail, really helps you navigate that process. So with that said, John, I think you were going to jump in here with a few things.
Yeah, with the automated data workflow. So I see we're running up on time here, but just as a quick overview, a lot of people, if you guys are already using the product or saw the WIP report and financial ratios dashboard, this is just a 101 of what it is. So it's essentially pre-scheduled triggers to automatically manage data flow in a streamlined and repeatable way. It all flows into a central location, whether it's getting pulled hourly, daily, twice a day, nightly, or weekly, or whatever fits the business's needs, to create reports, visualizations, perform analysis on. And then it's also for the users to quickly analyze. So one of the key things too is having the data structured in a way like Kevin just showed. So a lot of common pain points that people experience, it all kind of rolls into the Excel and also getting out of date information, but time consuming, cumbersome processes that can be automated away. Unsiloing information in that structured way to getting delivering insight to those that need it, whether it's the project manager that needs to see the impact of an approved or pending change order, over under billings, where their billing status is. Then the key one here is in the bottom right, maximizing the long-term value of your data. So I have AI on there. It's kind of hard to avoid at this point, as everyone can see the emerging usage of it. And in order to utilize it, you have to have your data structured in a way for it to understand it. So for AI to understand how your business operates, it needs to be able to read it and past historical performance. So when you enter a prompt, it can give an educated output. We could do a whole webinar series on how AI can benefit construction, but we're running short. And then also forecasting. So if anyone on this call has to do forecasting at all, whether it's cash flow or revenue forecasting, it's an art as much as it is a science. So making sure that you have peace of mind of having consistent and accurate data to sharpen your forecast will make sure that you're getting the best output that you can. So with that, we did want to show, Kevin, let's just show an executive dashboard. And then if there are any questions, please drop them in, and then we can wrap this webinar up.
Yeah, so what I'm showing on my screen right now is ProNovos' version of our executive dashboard. And really what it's meant to do is pull all the key data points within your organization and make them available at your fingertips, right? I think this is primarily stuff we all know. If you're an executive within a construction firm, you should be monitoring, but it's not always easy if you got to go run 12 different reports, pull up 3 different Excel files. Really making sure that data is easily accessible and available makes it way more likely that you're going to utilize that data to make informed decisions. So that's kind of what we're seeing here is, we've got our financial data. So you've got your revenue, your gross profits, your trial cash balance, AR, AP. You've got some information around HR, your total head count, broken down by department, how many employees you have within each department. And then down below some general project health. So you could look at, hey, what are my over under billings? What are my backlogs by project? So that's really important to make sure you're focusing on the projects that most need your attention. And I think like tying it back to what John was saying is part of the most valuable piece of this is really providing that structure to your data, because I think everybody knows in construction, you produce a lot of data, whether it's from the field, your own accounting information, but making sure there's a structure to that data that helps you make informed decisions. That's our goal at ProNovos, is to help you navigate that process, because it can be a lot, and we want to make it as easy and digestible as possible when you're analyzing your data. So John, I'll pass it back to you to wrap up.
Yeah, so we were hoping to show a project level dashboard. We kind of ran up on time. So if anyone here is curious on seeing ProNovos, there should be a poll question that pops up if you'd like to schedule a live demo. So our analytics marketplace has over 20 pre-built dashboards. So this is the little plug. And we also offer a cash flow forecasting tool as well. On June 7th, we're releasing the revenue projections, or we're doing a webinar on our revenue projections dashboard. So if you guys are interested, let us know. And with that, we'd like to thank Paul for giving his time, and Kevin for joining today. Do you guys have any closing comments?
No, John, I think it was great. Thanks for having us.
Yeah.
Yes, same here. Thanks, Kevin. Thanks, John.
All right. Well, thank you everyone for showing up. And if you want to learn more about ProNovos, you can visit our website at www.pronovos.com. So thanks everyone for attending.
Thanks.